then let's focus on a couple of stocks. Then Shriram EPC, that stock was holding higher in today's trading session on the back of news that in fact it won an order in a joint venture with L&T. To understand more about that particular order, we have with us Mr. Shivaraman, the MD and CEO of Shriram EPC, who joins us on the phone line. Hi, Mr. Shivaraman. Thanks so much, sir, for joining in. Could you tell us what's your share in this particular joint venture that you won with L&T? I believe the order is a 700 crore order. It's in Tanzania. Could you give us your share in this particular order? What kind of working capital will be required? What's the duration of the order? And maybe what kind of margins will you enjoy on this particular order as well?
Yeah, so basically this is JV and with L&T. We are doing about 25% of the work. L&T is the major partner. Obviously, they are doing 75%.
Okay.
This is a water distribution project in Tanzania, part of a larger set of projects which is funded partially by Indian Exim. So it's an Exim Bank funded project based on an Exim Bank Indian line of credit to Tanzania. We expect the job to take about 2 years to complete, and margins, of course, fairly decent. I would not say great, but decent, good margins. Working capital is also likely to be quite low because there is an advance on the contract. So I think largely the project should take care of itself. I don't think either of us would need to put in substantial working capital from our own resources to complete the project.
Okay. That's good to hear, sir. So 25% of the order would accrue to Shriram EPC. Late last week, over the weekend, in fact, the company in its board meeting has also approved that in lieu of the working capital loans given to the CDR lenders, they will be converting those working capital loans into equity. So you will be issuing a preferential issue of about 35 crores. Could you tell us the kind of dilution it will entail? What will be the promoter holding? Because it's already come down from 50% all the way down to the 21% mark as of December. And after this, what would be the debt situation on the company's books?
Yeah, actually, this is basically the tail end of a larger debt conversion process that is ongoing. So what we are allotting now is only some residual issues for certain bankers where certain approvals were still pending. So in total, we have issued quite substantial equity to the bankers, and we have also infused promoter capital over the last few months, which has also got converted in the last month. So post all that, the promoter holding in the company will be around 26%. And the banks and the institutions and the public will be holding the rest.
All right, Mr. Shivaraman, very good that you won this order, etc. But the street is clearly telling you the picture because the stock has come off close to around 5% from the high point of the day. The big question really is, what's the debt in your books currently? How much of
currently
it is
we have? Currently we have about 700 crores of debt. That's primarily working capital debt.
All right.
So I think that's a sustainable level for us going forward.
The consolidated debt is what, sir, in your books? 700 crores?
About 700 crores, around 700 crores.
Okay.
So,
but you've converted this into, what percentage of this has been converted into equity, or this is post the conversion you're left
post all the conversions, post all the conversions.
Okay, so you're still left with 700 crores. So what is the plan with respect to this debt then?
No, we have currently an order backlog of around 4,000 crores. And we see a substantial, shall we say, pipeline of orders, new orders coming in. We are seeing a reasonable turnaround in terms of order flows. So I don't think we should have a great difficulty in servicing this level of debt at the level of business that we should be able to achieve going forward. We also, as we announced a few months ago, we have a large contract in Oman, about 1,300 crores. That's moving quite well. The project is progressing satisfactorily. We also see more opportunities in the East African region.
Right.
There are more projects coming up in Tanzania, which hopefully we should be able to bid on.
Right. Mr. Shivaraman, good to see, and we'll definitely like to talk to you when you win those orders. But you're telling me that the total debt in your books is 700 crores. I'm looking at your last quarter numbers. Your finance cost was 76 crores.
Last quarter numbers will not reflect it because the conversions have not fully happened as of the last quarter.
Absolutely, sir. But what will your quarterly finance cost be? Because if it's 700 crores, then your annual finance cost should be what? Only around 70, 80 crores. Over here in the last quarter itself, you paid 76 crores.
No. That's why I said the last quarter, the conversion, we have converted almost more than 1,000 crores of bank debt into equity over the period of last year. The bulk of the conversions actually happened towards the last quarter. So until then, the interest we have been fully servicing the interest for the entire loans. So since the conversions, so you will see the impact of the conversion happening only in Q4. We release the Q4 numbers, you will see the impact of all the debt conversions filtering through.
Okay. Could you come back again?